We're not even 1.15 times levered. We're very fractionally levered, and our debt that we have is 4.5 years out. So we don't really have any trigger points anytime soon. And if Bitcoin were to fall 80%, we're still over collateralized and we're fine. So our balance sheet's pretty stable.
Saylor reframes the entire discussion and takes a step back when asked if Bitcoin can reach $150,000 by the end of the year. He warns us that you have to be ready to deal with the G-forces if you want to ride the rocket. This is due to the fact that Bitcoin has had 6 severe declines in the last 5 years alone. Enough of each to deter unscrupulous investors. For more videos like this, do take a moment to like this one, subscribe to the channel, and enable post alerts. You may also watch our other videos about digital assets in general and cryptocurrency in particular. Additionally, leave your thoughts and observations in the space provided for comments below. Every action you take greatly aids the channel's expansion and the YouTube algorithm. Thank you, and have fun with the video.
But if you want to ride the rocket, you got to be prepared to pull the G's. Over 5 years, Bitcoin's had like 6 brutal drawdowns. If you roll the clock back 13 months, we were sitting around 68,000. And then after the Trump election, we had this incredible rally from 68 to 106,000 in 5 weeks. If you go back 14 months, we were about 55,000. And so if you'd said we're going to go from 55,000 to 94,000 in 14 months, that would have exceeded any reasonable investor's expectations. Over 5 years, Bitcoin's up about 50% a year on average for the 5 years. Gold and S&P are studying the cost capital at 14%. My company's strategy is up 71%, equivalent to NVIDIA. There's no other stock in the S&P that's done any better. So I think the volatility comes with the territory. If you're going to be a Bitcoin investor, you need a 4-year time horizon, and you need to be prepared to handle the volatility in this market. So, pretty strong base of support around here. There's an incredible amount of leverage coming out of the system, a lot of liquidation. A lot of the OG holders were selling at the $100,000 level, and so I'm fairly comfortable at this level. I would think that we'll build from this base and we'll rally from here. Obviously, it's hard to make a forecast for the end of the year right now, given what's happened over the past few weeks, and especially the shift in the macro environment. But, as you know, my view is Bitcoin's going to outperform gold. It's going to outperform the S&P. It is digital capital. And so if you're a long-term investor, this is the place to be. We're not even 1.15 times levered. We're very fractionally levered, and our debt that we have is 4.5 years out. So we don't really have any trigger points anytime soon. And if Bitcoin were to fall 80%, we're still over collateralized and we're fine. So our balance sheet's pretty stable. The company's strategy, just like an intelligent bank, would be to build amplification for the common stock using preferred equity. So the equity never comes due. It's a dividend payment declared by the board. It's not a coupon. We can't be in a default. There is no credit default situation from the digital credit that we're selling at this point. The digital assets economy is exploding and growing in a bunch of different dimensions. Right now, the way to think of it is that half of the economy is built around Bitcoin. It's digital capital. Bitcoin is digital gold. And the killer application on top of digital capital is digital credit. Instruments like Stretch, STRC, credit instruments that pay yield. And that's a very simple business. The other half of the economy is digital finance. And it's going to be built on the proof-of-stake networks that are emerging, the Ethereum Solanas, the BNBs. And the killer application for that part of the digital assets economy is tokenized currencies, a la stable coins, tokenized securities, tokenized real-world assets, tokenized brands, and DeFi in general. Well, that's a very complicated technical development, and I'm sure that stable coins are going to go from hundreds of billions to trillions of dollars. but it's not really competing with digital capital. No rich person wants to buy the currency instead of an equity or a real estate or a capital asset.
Michael, given where Bitcoin's trading right now, are you buying?
We are buying. We're buying quite a lot, actually, and we'll actually report our next buys on Monday morning. I think people will be pleasantly surprised. In fact, we've been accelerating our purchases.
Are you ever not buying, Michael?
1% of the network, and we bought it on a blended average about 74,000 a coin. The point that I would make for any investor is, if you have money you don't need for 4 years or longer, and if you don't trust anybody, you want no counterparties, you just want to own a piece of the global digital economy, you buy Bitcoin. It's the commodity. If you're an equity investor and you want to bet on digital credit and you want to bet on digital capital and you want some amplification, you buy an equity like MSTR. Right. If you have money for less than 4 years and you're an investor and your time frame is 12 weeks, you should buy the digital credit. For example, the credit instruments we've created have stripped the volatility off of Bitcoin. Bitcoin's vol is like 45 on a trailing 30-day average. We have instruments at 28, 21, 15, and stretches a vol of 8. So if what you want...
Dominance increases dramatically if Bitcoin reaches a new all-time high. Each cycle demonstrates this. New age liquidity leads to increases in BTC supremacy. Bitcoin typically stays at a steady level, such as 10K in 2019 or 100K now, if it doesn't reach a new all-time high. While altcoins leak out, gently absorb liquidity from them by grinding sideways. Bitcoin performs better than altcoins in both rising and sideways situations. The position of Bitcoin is strengthened by quantitative tightening. Bitcoin has strong on-chain support when considering both the technical dominance analysis and the Saylor's macro view. The leverage is eliminated. MicroStrategy does not pose a danger to Bitcoin, but it does maintain aggressive accumulation, stablecoins, and tokenization growth in the digital economy.
Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin dominance. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So I'm actually recording this video on November 10th. I'll be out of town for a few days. I'm going to be speaking at Bitcoin Amsterdam. So my apologies if things are a lot different than when I made this video, but right now Bitcoin dominance is right below 60%. Okay. Now, I'm still of the opinion that dominance is going higher in the short term, right? And a lot of people have asked, like, well, why is it crashing and whatnot? But guys, when you zoom out, it's been moving up for like 8 weeks in a row, right? It's not moving up as quickly as perhaps I would want, but it's a lot easier to know what way the wind is blowing than to know exactly how fast that wind's actually going to blow. And again, I think dominance will likely continue to trend higher. Now, one reason for that is that quantitative tightening, while it will end, it hasn't ended yet. And at least last cycle, we know that Bitcoin dominance actually topped in the post-halving year. Let me actually go back. It actually topped in the post-halving year. And while it was not the macro top for Bitcoin dominance for the cycle, it was a top for a while. Remember, the actual top for Bitcoin dominance last cycle occurred during quantitative easing. Okay? So that's an important thing to remember as well. But I could see a scenario where Bitcoin dominance goes up a lot and then it ends up topping right around when quantitative tightening ends in early December. One of the reasons why early December makes a lot of sense is because a lot of the larger coins tend to bottom out against Bitcoin in early December. For instance, if you were to look at the ETH Bitcoin pair, I mean, look at all the prior Decembers. You know, this is December of 2016, December of 2017, right? Early December of 2017, December of 2018, right? That's early December of 2018. And so on and so forth, right? You could even go look at December 2015. Here's December 2019, right? Like the list goes on and on.
The message of Michael Saylor is straightforward but impactful. Volatility comes and goes. Bitcoin won't go away. The markets will tremble. Costs will change. Altcoins will fluctuate in value. However, Bitcoin, a digital asset that is widely used, mathematically rare, and still outperforms all other significant assets on the planet. Buying is still a micro tactic. Institutions continue to come in. Furthermore, the long-term structural pressures are still very much in place. If this breakdown was useful to you, please click like, subscribe, and turn on notifications for more in-depth crypto analysis.